Hi, I'm Victor. Welcome to the Active Value Investor channel. In this video, I'm going to be covering Meta Platforms, commonly known as Facebook. They announced their earnings today, and I've updated my analysis on this company. It's a stock that I own, and I'd like to share with you my conclusions on this particular investment. I scorecard my investments, and I want to ask 4 questions that lead to a decision. Do I want to be in the industry? Is the company operating and performing well? Is the balance sheet in good shape? And I want a discount on that stock so I could see my investment go up in value. Based on those 4 questions, I then decide whether I'm going to buy, hold, or sell that particular stock. The earnings report came in for Meta, and a couple of things surprised the street. First, their revenue was higher than expected. It was flat from 2021, which was a record-breaking year. Everybody was in COVID lockdowns. Everybody was on Facebook. So advertising just hit a peak, and they were able pretty much to match the same revenue. The net income was less than 2021, but they had really good net income. Something that was incredible was their family daily active users, people on their platform, went up by 5% year over year. So there's more people on Facebook. Active users went up, and Facebook active users went up. So overall, even though revenue remained the same, they have more users. So they have a larger population of people on Facebook, which is a big positive. Over the past 5 years, Facebook would have returned really a negative 19%. And that isn't a great investment, but it's mainly because in 2021 began the big drop in Facebook. Over the past year, you would have seen your investment go down 52%. And again, that big drop, I think tech stocks were oversold in 2022. And this is a pretty good example. The number one social company around the world was really discounted heavily in 2022. This year in 2023, Facebook stock's been going up quite a bit. It's gone up 22.75% over the last 30 days. But if you add on how it's been trading in after hours, which is up more than 17%, collectively, it's up 44% in the past month. 44% in 30 days. I value the companies I invest in by discounting their future cash flows. What I've done here is I've updated the cash flows I expect from Facebook, Meta, and put them into my model. Beginning with free cash flows, 2022 was a year where the data didn't really line up with the historical trends of the company. So I averaged 2021 and 2022 and divided by 2 to get a good starting point. And that led me to having $29 billion in free cash. I think that's a rational number for 2023. On that, I'm going to have it grow at 20%. I think the worst is behind Facebook, and they should see an increase of revenue. This is a great place for advertisers to spend their dollars. Facebook does a great job of giving advertisers great return on investment. So therefore, advertisers keep coming back. That's why their revenue was higher than everybody expected. I used a Finbox provided weighted average cost of capital, 11%. I believe that's a pretty high number. I would have gone with like a 9 because this is such a healthy company. But this is what Finbox provided. So I'll go with 11%. Growth rate of 20%, growing years 2, 3, and 4, and then a long-term growth rate of 4%. Based on that criteria, I come up with a value of the company of $560 billion, but the market cap today is $401 billion. It provides a 35% discount on the number one social platform on the planet. Their debt to EBITDA is very good. It's basically 0.34. With EBITDA, they could pay off their debt in a couple of months, and they have a lot of cash on the balance sheet as well. So let me scorecard Meta and go through the 4 questions. First, do I want to be part of the industry? Absolutely. Social networks create tremendous value. Specific to Meta, it is very well operated. It's created just a very big moat or really barrier of entry to its competitors, because it's just the dominant platform that people want to be on to follow their family, their friends, their communities. It's just got such a stranglehold on this particular industry. Their balance sheet is in great shape. They have lots of cash on the balance sheet, and their debt to EBITDA is less than 3. You're getting, or I should say, there's a discount available on the stock, so it gets a check mark there. And I am a buyer of Meta. I've been buying into the stock, knowing that I have a valuation higher than what the market had, and Meta was oversold. It's reflected in the huge rise in the overnight trading of 17%. And I will continue to buy Meta on dips. Thank you for watching the video. I appreciate it. I hope you found something new about Meta and something interesting in the analysis. Please keep in mind, I'm not recommending you buy Meta stock. I'm just sharing my experience as a small investor in Meta. Thanks again for watching. Good luck investing in 2023.